I've said it before, but short-term rentals may be slowly dying. Gone are the days of the Wild West of real estate investing where you could buy a property, throw it on Airbnb, and bring tenants in every single day, every single week, and run them in and out of neighborhoods and condo complexes and all of that. Short-term rentals are being cracked down on everywhere you go, and you have to be super, super careful as you're investing in real estate to make sure that you don't buy a home that's in an area that does away with Airbnbs or has a limited number of permits available for you to use as a short-term rental. As these regulations continue to come in, it's going to put more and more pressure on your short-term rentals. Today, I want to share with you 3 ways that you can pivot away from your short-term rental if those regulations come to your area and you are no longer able to short-term rent your investment property. Hey guys, I'm Andrew Lewis, real estate investor and entrepreneur with over 10 years experience building and growing a real estate team and investing in real estate. Before we dig into today's video, make sure you take a minute to hit that like button, leave us a comment below, and don't forget to hit that subscribe button so you don't miss out on future videos. I'm here to help you break out of the 9-to-5, gain financial freedom, and grow wealth through real estate. Short-term rentals are being cracked down on in many areas across the United States, and today I want to help you strategize for if and when that time comes to your area, what you can do with those homes that you currently use as a short-term rental so that you can continue making that passive income every single month and continue to build your wealth in real estate. Pivot number 1 is to turn that property into a long-term rental. I tell people all the time when it comes to evaluating numbers for a short-term rental, it's great to see those numbers and be enamored by those numbers, but at the same time, when you're buying that property, you should also be running long-term rental numbers on the back end to make sure, just in case something were to happen to the short-term rental market, that you're able to convert it to a long-term rental and still cash flow that property. If that property is going to be upside down on the long-term side, it's probably not a safe play for you to turn it into a short-term rental. So if you're thinking to purchase one, that is a great strategy to use before you actually buy. But if you already own one and short-term rentals are going away in your market, converting it over to a long-term rental is a solution. A long-term rental, simply defined, is you locking in a tenant typically for 12 months or more at a time. You're going to be able to charge a little bit less when it comes to rental income because they are signing that long-term agreement and you don't have to deal with vacancy as much. So you're not going to be making the same cash flow that you had on your long-term rental. But if you can at a minimum be breaking even here, or hopefully cash flowing at least a few $100s a month, this is a viable solution if that short-term market goes away for you because it continues to bring in that passive income. It takes a lot of the headaches out of the way that you might have had with the short-term rental as far as providing access and cleanings and turnovers and all those pieces and extended periods of vacancies. This solves those problems and is going to lower your cash flow, but at least allows you to save the property and continue to hang on to it for the appreciation factor. Strategy number 2 is going to be turn this one into a medium-term rental. This one is quickly becoming my favorite go-to for rental strategy because it allows you the happy medium between short-term and long-term rentals, hence the name medium-term rental. With this strategy, you are going to take that property, keep it fully furnished. If you were just running a short-term rental business, you can keep that furniture inside of there, and now you're going to be targeting to rent this property out to people for 30 days or more at a time. Typically, you're going to be renting out to traveling nurses, corporate professionals, people that have been displaced due to natural disasters or floods within their home. You're going to sign them for a 30, 60, 90-day lease period to a fully furnished unit and typically able to charge anywhere from 1.5 to 2 times the normal rent on a long-term rental. So this is a very quick pivot for you, especially if you're in the short-term rental game, because you're able to still list these on Airbnb, sites like Furnished Finder, and you're able to find those tenants that are looking for a longer term solution that isn't 6 months, 12 months, but a longer term stay that isn't the 2 or 3 days that they may have had on the Airbnb side. You get to keep your profits up and you get to keep the furniture inside that unit, and you've probably already got the photos and everything all ready to go. So this is a quick solution to turn around that short-term rental And for now, this is an unregulated segment of the rental market. So the regulations just don't exist like they do for short-term rentals. And so if that gets banned in your area, the fact that you're signing people to 30 days or more gets you around those regulations and allows you to continue to create that passive income. Pivot number 3, you may have guessed it, but it might be time for you to sell this property. So I don't want this to be the first one that you jump to, because the reality is investors who simply got into the short-term rental craze in that market are quickly going to want to pull out, and that market is going to be saturated with inventory, with desperate sellers, and I don't want you to be the one that loses out on that money. If this is the option that you're going to go for, you either need to do it quickly the moment you hear that something may be coming down the pipes, or if you're too late and you just got a notice that you can no longer use your property as a short-term rental, I would recommend that you hang on to it for 6 months to a year so that you can get through some of that initial wave of inventory and not cost yourself thousands and thousands of dollars with all of the competition on the market. So when it comes to selling, take your time. Don't jump to a rush decision and end up costing yourself money because of the flood of inventory. If you can convert it first to a medium-term rental, at least have some tenants come through the property to save you or at least help you break even for a year or so, that's going to make you a ton more money when it comes time to sell, because a lot of that old inventory is going to have come off the market and you won't be in that desperate scenario that a lot of those short-term rental sellers are going to be in when they get that notice. Now, if you've decided it's time for you to sell due to a change in the short-term regulations in your area, don't forget that that doesn't just mean you're cashing out of this property and you're going to need to pay taxes. I never recommend that for you unless you absolutely need that money and that cash in your account for some reason. You're going to want to do a 1031 exchange here and relay that money into another property of equal or greater value so that you don't need to pay taxes on the sale of the property. So when it comes time to sell, make sure that you've identified another area that you want to reinvest that money in. It does not need to be in the same area. It does not need to be in the same state. It just needs to be a real estate investment of like kind, of equal or greater value, and you can plug that money right back in somewhere else and start another short-term rental business, mid-term rental business, long-term rental business, whatever it may be. You can even run that money over into a commercial property if you're willing to take that risk on right now, but you can put that money in other real estate investments and just shift the profits from one area to another. So don't forget about the 1031 exchange. Never pull that money out and just cash out unless you absolutely need the equity from that property. 1031 exchange is going to save you a ton come tax time. Those are 3 strategies that you can use to pivot your business. Keep in mind, your rental properties are a business. It is passive income, but it is absolutely a business. And so when things change, businesses don't just shut down. Real businesses pivot, make a change, and seek profits in new places. So don't give in just because your regulations have changed in your area with short-term rentals. Use one of these 3 strategies. If it comes down to it at the very end, sell that property off and go find a new place to reinvest that money. But I hope you found today's content helpful if you're in one of those areas that is being impacted or you've heard rumors of being impacted. If you enjoyed today's content, make sure you hit that like button, leave us a comment below about any questions you might have, and be sure to hit that subscribe button so you don't miss out on future videos. I'm here to help you break out of the 9 to 5, gain financial freedom, and grow wealth through real estate. See you next time.